In the democratization of alternatives is super cool. Today, Donald Trump is opening up retirement accounts, 401K's for both crypto, private equity, private credit, all the alternatives. And I think it's really interesting. I don't think that short time horizon investors with little education should have access to these investments because I think it's going to hurt them overall. There's a decreased liquidity for alternatives, and obviously it's increasing. I don't know if it's that great through ETFs, other funds that allow you to get into private credit, private equity, real estate, any alternative market, crypto. I just don't think the time horizons sync up for these fast turnarounds that people want. And I think that there are going to be some detriment to this. Now, for 401ks, I think it does work because more risk, more return, right? But then longer time horizon allows you to take on more risk because overall the returns are going to be higher in the future. Now, yes, there'll be ups and downs because there's going to be higher volatility, but it does work for your 401k, and I think it's interesting. I do think, though, there's a lot of interesting implications about this. Think about like family businesses, for instance, right? They have little education on this specifically, the alternative investment, so it might be good to get in a fund, you would think, at first sight. In reality, though, a lot of these investments, venture capital especially, which I didn't mention yet, but it's really, really risky. And usually you have to be able to have a high enough threshold of money to be able to lose to invest in them. Hedge funds, things of that nature are not as regulated as regular securities businesses and the trading in general. And I think that there's a reason for that, right? You have to have a certain minimum level of investment to get into these funds. And I think that's why they're excluded. And I think that might be a good thing. I understand the democratization of these alternatives is thought to be better for everybody, to give everybody a fair shot to make their money. And I only think it works in this sense, like Donald Trump did with the 401k. And I think it's a great idea for the longer time horizon investors. Obviously, you're not going to be able to make these specific investments in companies or funds with the lack of expertise from the consumer investment, retail investor. But I think being able to get exposure in one of these funds, just like you would in a regular index fund, right? For a specific market, for a certain segment of the market, industry. This is great. Obviously, crypto is a little bit different story because it's much more volatile than even the PEVC world. But I think that's a little more dangerous for the 401ks. But pension funds have already been done. Everything like CalSTARS, right? CalPERS. All these pension funds, these teacher pension funds with billions of dollars in every state in the entire country, are in these alternative investment funds already, these private equity funds, but it's just going to become even more widespread. And I think there's certain things that we have to be careful about in terms of liquidity and making a traditionally illiquid asset liquid through these ETFs. This is a giant thing going on right now, but I don't think it's all positive, and I think we've got to be a little bit more wary than meets the common eye. This, I think, though, by Trump is a great idea.